Hey guys, it's Shelly Killinger here from Remax. I hope you're having a great day. So I wanted to talk to you for a minute today about the mortgage process. It can seem really overwhelming at first, and I wanted to give you 3 things to avoid and 3 things to make sure you do. So 3 do's and 3 don'ts about getting a mortgage. So the first thing that you should do is to get pre-approved early. It's really wise for you to sit down with a mortgage lender before you even start looking, because you can evaluate your options and look at your financial picture. There are a lot of mortgage options out there for you, a lot of loan products that really vary depending on your credit score, depending on your debt to income ratio, and you're only going to be able to ascertain which is the best product for you if you sit down prior to looking at property with a clear head and say, what am I comfortable with in terms of a monthly payment? What am I comfortable with? What can I get pre-approved for? This will help you really nip in the bud any issues you might have with your pre-approval, and it also will help give you a direction for your home search so that you're not looking at homes that are outside of your price range and falling in love with homes that you can't afford. So that is definitely my number one do, is get your pre-approval early. The second do is to keep important documents and turn them in on time. So when you're involved in the mortgage process, once you're under contract and actually getting your mortgage, your lender is going to come back to you and they're going to ask you for a long list of documentation. So it's important that you start keeping those documents if you're thinking about buying a home in the future. Some examples of those documents: they could ask you for your W-2s, they could ask you for pay stubs, they could ask you for bank statements. All of those items you should start keeping in a file if you haven't already, so that you have them at the ready whenever your mortgage professional asks you for copies of them. The other part is to turn them in on time. So the mortgage process is extremely time sensitive. There are deadlines on everything, and even just a day or 2 of delay in getting documents to your mortgage lender could really result in a delay of closing. It could result in the deal falling through. It could result in a change of or having to relock your interest rate. So it's really important to get those documents in on time. So that's your second do, is to keep copies of all of your important documents and to get them in on time. And the third do is to be upfront and honest with your mortgage professional. It's super important that you're upfront and honest about how long you've been with your current employer, any bonuses that you might be getting, and the amount of those bonuses and how long you've been getting those bonuses. It's really important if you have any high credit card bills. I mean, they're going to find out anyway when they pull your credit, but if you have any issues with your credit, any foreclosures on your history, any bankruptcies on your history, I mean, it's very important to be upfront and honest. You certainly don't want to commit mortgage fraud, and you certainly don't want to risk your deal falling through, your home purchase falling through. So it's very important for you to be upfront and honest. That's tip number 3. As far as on the don't side of things, what you should not do or what you should avoid doing when you're getting a mortgage, I also have 3 tips. And the first one is, do not change jobs or quit your job. I know you'd think it would go without saying, but there are people that do it. And so it's my number one don't. Don't change your job, don't quit your job. Even if you get a promotion at work, it's very important for you to tell your mortgage lender, because probably they're going to want to do some extra, sourcing of the extra funds. If you get a raise, they're going to want to check in with your employer to make sure that the position is actually accurate, your new salary is actually accurate. And even though that's not a big deal and it's a good thing you're getting a promotion, it just takes time for that lender to go through those steps. And if we're 3 days before closing and you get this promotion, obviously things are going to be pushed back and it could derail the transaction. So we don't want that to happen. And obviously it goes without saying, don't quit your job, because then you will not have the funds needed to close. So that is my number one don't, is to not quit your job and to not change jobs. So my number 2 don't is to avoid depositing large amounts of money and to avoid transferring money between accounts. The lender is going to be watching every move that you make financially. So you are going to have to source all of your funds. So if you happen to have $3,000 lying underneath your mattress, you're going to have to be able to source those funds. And if you can't, there's a possibility that your lender will not allow you to apply those to the purchase of your home. And the other part of that is to not move around large amounts of money. So you're going to have to source every penny that you apply to this house. So if you're moving funds in from another account that you happen to be the primary person on, that's fine. We'll fill out a little form that says where it comes from. They're going to want to see statements from that account and where it's coming from. But if your mom all of a sudden, gives you $10,000 to apply towards the purchase of your home, we're going to have to source that, and we're going to have to get probably copies of her bank statements. So it's best to avoid that. And if you do plan on doing that, just be upfront and honest with your lender about it. That way we can, work through that in advance and we're not dealing with that last minute. So that is your second don't, is to avoid depositing large sums of money, especially ones that you can't source, and to avoid moving money around between accounts. So the third don't is to do not make large purchases or do not take out new credit cards or co-sign on new loans. So you want to make sure that you have the funds available to close. So you don't want to make large purchases. The lender is going to want to know where that money is going, and you also don't want to spend the money that you had reserved for closing. So that is, a big part of that don't spend your money, unwisely. But also you want to avoid credit inquiries. So don't apply for a car loan. Don't, take a loan out for furniture. Don't co-sign a loan for somebody during the mortgage process, even though you want to help them out. It's really you need to be very careful with your credit. You don't want to have any additional inquiries on your credit because it could affect your credit score negatively, and it could affect your ability to get your home. So you want to avoid that just during the mortgage process. After you close on your loan, you can go buy your new car and you can go buy furniture for your home. I know it's exciting, but you need to hold off on those things until after you've closed on that loan. So those are my 3 do's and my 3 don'ts for getting a mortgage. So if you have any additional questions, please feel free to reach out to me. If you're watching this on YouTube, please do subscribe to the channel. We don't want you to miss out on any of our market updates or our information on buying and selling real estate. Thank you guys so much for watching. I hope you found value in this today, guys. I will talk to you soon.